Aloha and welcome to Jakesbook, second quarter, July 2011.
The key positive indicator for the second quarter is the Honolulu housing starts number. Historically, there are 1,550 single-family home starts each year, which keeps pace with the 1,600 new households that are formed. Annual housing starts in Honolulu are now running at 814. This is 52% of Honolulu's 20-year historical level. This implies a potential housing shortfall as Hawaii's economy stabilizes. This housing shortfall is evident in months' supply of inventory on the market for June. Supply is down to around 6 months for both single-family homes and condominiums. Homes for sale in the month of June were at 3-year lows for both categories. A shrinking supply is also evident in both housing categories by the decreased number of new listings. In the second quarter, we see median sales price dip about 3% for single-family homes, while condominiums are down less than 1%. The number of closed sales in Q2 have slipped 7% for single-family homes and about 3% for condominiums. Q2 pending sales dipped about 1% for single-family homes, while condominiums are up 4%. Second quarter days on market is up 20% for single-family homes and 37% for condominiums. Percent of original list price received is relatively unchanged at 95%. Housing in the second quarter has continued to become more affordable relative to Hawaii's median income. In this graph that goes back to 1975, we can see the last 5 U.S. recessions that are highlighted in red. The line in the graph represents an index that tracks Hawaii's economic activity. If we focus on the last 4 years, we can see Hawaii's economic slide downwards until the spring of last year. From the spring of last year through this summer, the index is up 1.6%. This shows the beginnings of a recovery. In the month of June, we see monthly visitor arrivals to Hawaii up 16% year over year. Statistics for May show visitor days are up by 8.5%, and that's compared to the same period last year. In May, we also saw an increase in visitor spending in Hawaii by 15.3%. Looking at Hawaii's employment by sector over the last 3 years, we see government, education, and healthcare employment remaining firm. Hospitality and professional services look to be turning up, while trade and transport, financial and construction employment are still lagging. In summary, for the second quarter of 2011, we see a decrease in prices for single-family homes and condominiums, a continued shrinking of supply, an increase in the amount of time to sell a property, and a stabilizing of Hawaii's economy. Interest rates remain low at 4.25 with 2 points. This rate is calculated based on a 740 FICO score with 20% down. In June, we had 8 neighborhoods, shown here in red, with increased sales and decreased inventories. Areas shown in blue have decreased sales and increased inventory. Areas shown in green were unchanged compared to the same month last year.
Mahalo for watching, and until next month, aloha.